Hi guys, welcome to the Saving Money Show with me, your host Sean. If you find any of today's entertainment helpful, don't forget to smash that lovely like button. Helps with the YouTube algorithm and getting the video out to more people. If you haven't subscribed already, don't forget to smash that lovely subscribe button and bell notification. You'll be notified when the video gets uploaded. If you're looking for a free trading platform in which to trade, don't forget to look in the links in the description below. You'll get a free share for signing up and depositing a small amount. Free trade, you get one for depositing just £1. Now on with the show. We're talking Zoom. I said it would go over $200 and I was laughed at. Now you can see. Question is, do we go in while it's climbing, or do we sell or hold? Well, as I'm not a financial advisor, I'm just some idiot on the internet. That is not for me to say. I will just tell you the pluses and minuses. Well, if we look at what the analysts say, because we always have to look at what the monkeys say, because the sheep follow the monkeys. Well, they say that there will be an increase in revenue, and that increase is going to follow on to next year. It will carry on with 330 million more next year than it has this year. Now, we can see that we have, in order to carry on making a profit, we have to double the income, then double the income again year after, while only increasing expenses by 50%. Now, if the analysts are correct, and remember they aren't always, that this company actually beat earnings, and I don't know who put those earnings up for the analysts. As I said, the analysts work for certain companies and don't always give good ratings to certain companies. Then this isn't going to double, but it will be close. So it's up to you whether you think it will hit there. Personally, I will wait for it to come under 200 before going in again. And on the other side of it, Facebook have come up with their web chat system. But I've just got off of a Zoom chat with someone, and it went a lot better than I expected. When I tried Facebook's web chat, it doesn't compare. The Zoom conference, we had four people on it. We could hear each other, see each other. There wasn't a lag. Now, I know Facebook have rushed this out, and I know Facebook can throw a load of money to get it better. But there's a reason why all the other big tech companies haven't rushed one out, because they don't want to put it out until it's perfect. But so Zoom will be the premier one for the moment. But saying that, I can see Apple coming out with their one. They have FaceTime at the moment. What's to stop them doing a split FaceTime business model? Well, stop Google coming out with it. I think the only thing that stopped them at the moment is the Facebook model, is that it isn't crisp enough. It doesn't compare to Zoom. And then if Facebook, it's because they're always after a buck, and they'll always make you a buck. If Facebook do improve the quality of their web chat, you have to look at the pricing. Zoom are a one-trick pony at the moment. $208. Facebook have a wide moat at $235. Where would you rather put your $200? Facebook have the advertising, the web chat, the shops, the Shopify tie-up. You know, they have so much to them, and I hate them for it, because I'm not a fan of the way they go about business. Anyway, but you can't help but admire the way that business has gone. Look at that, almost steadily up. They've had a drop here and there, but I've done a review on Facebook, an in-depth review, and I can see that share price doubling, if not trebling, in the next 5 to 10 years. And I'm kicking myself for not getting in when it was $20 a share. People were criticising Zuckerberg for the IPO price because it had an initial drop back here. You know, what idiots. I bet they're laughing on the other side of the face now. But question is, do you want to go into Zoom? When people are saying about the stock market, why it's going green, it's because of the FANG stocks. Stocks like Facebook. People are not buying it for today's value, they're buying it for the future value. And they're not looking at it. It's the kind of people who are buying Tesla for the future value, 5-10 years down the line. They're thinking, if I'm buying Tesla for 5-10 years down the line, why am I not buying Facebook for 5-10 years down the line? Has a lot more cash on hand, has a lot more strings to its moat, it's profitable, and you can't argue with that. And then they're saying, why am I not buying Google? Why am I not buying Amazon for 5-10 years down the line? And this whole situation has changed people's investing mentality. You know, you have a PE ratio of 37. Now, when it was a PE ratio of 25, people were saying, oh, it's above 20, I won't touch it. And this isn't for saying you should go for Facebook rather than Zoom, because you never know, Zoom may overtake Facebook. But I am just saying that you need to work out the risk reward. Is it worth the risk? Is the reward worth the risk? Check out the financials. Check out what the future financials are due to be. And then see if a new player comes on the market, how much they will bring in. And that's what you've got to base your valuation on. And I'll see you in the next video. Because one thing you have to do, whether you're going to Zoom, Facebook, or anyone else, is hit that like button and subscribe. And I'll see you later. Goodbye.